Okay, I'm going to do something a little bit different this morning. I'm just going to have a look through a few oilers on my growth list. Obviously, we looked at these last night, a few of these last night. I'm already riding a couple, so do your own research and all that. But basically, I'm just going to go through the technicals and I'm going to go through how I rank stocks, and we'll have a quick look at all the oilers loaded into my GTRS screener. And in fact, we'll do that first. I'll just bring them up. I've ordered the whole of the UK oilers into my screener, and I've ordered them by what I trade towards, the kind of William O'Neill principles. Now, first things first, as always, when we deal with commodities, commodity related, we always say commodity related stocks are a pain in the ass because they get dragged around by the underlying commodity. So the oilers get dragged around by the oil price, the miners get dragged around by the commodity prices they're following, and you can have a fantastic gold miner, say, and gold just keeps drifting, and the market doesn't care about the gold stocks. So you've always got to be wary of that. I always say, if you load your portfolio in one of the sectors, or just in commodity related sectors, you're going to have an extremely difficult time in the markets, because it tends to add more volatility. So in small caps, it's common to see small caps swing up and down 25 to 35% and still retain the trend, higher lows, higher highs. Those swings, when you put in the commodity related effect and small cap commodity stocks, you can add you can add 10% to that. They can swing up and down 45, 50%. They really can, and still retain a primary stair-stepping sort of Dow theory trend. That is what you deal with in this area. I'll take my phone out of my pocket so it doesn't buzz over the video. So yeah, commodity related is a pain in the ass. When it's on, it's on. When it's on, we tend to see them in the screens, and this is an important point. Everyone's bullish on something all the time, but when you see the whole sector coming into my screens, for me, because I screen the market in a way where I get on board. I look at signals, I look at pullbacks and breakouts, as 90% of people tend to do. And if they're hitting my screens, not just the occasional one, as a group, well, that puts a little bit more weight behind a commodity move. Now, we know oilers have been having a pretty good move for some time, but what we have noticed over the last month is that blue sky stocks have also been hitting the screens more than the main market leaders, I would say. So that just begs the question, are we going to get a move in the blue sky area? And basically what I'm going to do is I'm just going to go through a few of these, and yeah, mid caps, small caps, mid caps, hitting the mid-cap screen for me, it's still sort of in the higher beta end, but once you get into the large caps, Royal Dutch and BP and stuff like that, they're efficient main market stocks. You're not going to see hundreds of percent trends out of that kind of stock, are you? So let's just bring up a few of these. I've ordered the whole GTRS. ENW had a big move, had a fantastic move. PTAL had a good move. I'm in this one. In fact, I'm in two of these. I'm not going to tell you what I'm in, because I don't want people just blindly following. So I'm in two of the two I'm looking at today. I'm going to look at. In fact, I'm not going to look at this GEEC because it's got high debt multiples, and thousands of stocks to choose from. Why choose one with high debt multiples? It's probably not worth it, is it? You know, in the small cap space, you know, I tend to just steer clear of them. Anyway, I'm just going to bring the charts up. I've prepared these charts yesterday. No, today. Some today, some yesterday. SQZ. What day is it? It's the 17th. So I've done the GTRS today. SQZ. You know, this is the total ranking against all stocks in the UK market, what I follow. So in the Oilers, obviously, it's ranked 4th in the Oilers. This is, you know, we talked about this in the screening session last night, obviously. It's the more liquid stock out there. It's traded, it's traded 52%, it traded 10% volume before the range posted this morning. So, you know, we knew this one was the go-to stock this morning. It was quite obvious, really, wasn't it, last night? But, you know, ranking in the whole GTRS is 84, obviously. This is the chart. So this is where we looked at it first. We knew it was basing out, first retrace kind of after trading meaningful highs. And then it based out. And we got a little base treat, so here, and it mutated into a bigger base, so, and then it broke out of that as well. So entries for those at trading bases were kind of breakout, first retrace, swing point, breakout again, and then it did a little mini base here, and there was another sort of something I call a Momo swing sort of entry when it's a high in the sky base. And this is last night's close, you know, high volume swing point from what I call mean trend. So all these entries, what I've just gone through here, I just repeat this process every day. I look through the markets. That's my job. That's what I do. I won't go too far off piste. So obviously last night's end of day close, I know it's up 6% now. It's gone up fast, this one. Next on the list, ENW. So I forgot where. So higher on the list, it's a mid cap, it's a medium floater gain. It ticks a lot of, you know, the boxes I trade towards. The only thing with this one was it didn't really offer a little base. It just came off the lows and ripped higher, didn't it? And from this report down in this area. And we didn't really get a consolidation for me. I like to trade off a consolidation or a pullback. So yeah, we got a pullback today. I see that. And 1 second. It's a very illiquid one. I do like illiquid stocks myself. Moving on. Onto JSE. Obviously not as high on the list, but still ticks a lot of the boxes I trade towards. And, you know, this is a work of art, isn't it? You know, breaks out of the base, first little retrace. We've got high volume day, and it's just pottering around on low volume at the moment. But if oil wants to lift all these stocks, and we try to trade stocks what can trade stronger than the market, stronger than, you know, the oil price. The oil price can potter around it, and we try to look for stocks what are going to walk to the beat of their own drum anyway. But you know, it's the other side of that. Like with the gold stocks, you've got fantastic gold stocks. They're all trading towards great sort of profit and big ticks up in the growth. And but the gold price just, you know, drags them all down. You know, so it's when you get that bigger move in the commodity where it can drag down the stocks what should be you know, floating. So that's PTAL. Bit of a favourite of mine, talking my own book, I will say. So that was JSE, you know, ranked 124. Then to PTAL, ranked 35. and the chart here is just a consolidation, and it's just a shallow pullback, isn't it? And we've had a high volume update here, and you know, hopefully it can sort of, you know, beat out just consolidate this previous move, and we can get another good move out of it, hopefully. So that's what I wanted to do, just go through those 4 stocks, and basically this is SQZ today. Actually, it's ripping now, isn't it? And even when they move out of a pullback, sometimes you'll get like a little bull flag. So, you know, always throw out the clause, you chase, you die. So we've got to be conscious of whether you're trading a good reward risk scenario, or whether you're watching it move out of the station and then you're running down the tracks chasing it. You know, you've always got to be conscious of this. But you know, there you go. There's a few oilers. You know, some of them are illiquid. I like illiquid stocks myself. I tend to be a swing trader of more liquid, you know, stocks where you can sort of get in and out of them with a tighter spread. But I tend to look for illiquid, low flow growth stocks if I want a good trend. Obviously, you know, use this just as you know, watch them play out, see what happens. As always, when I do a video like this, you know, I can curse the things. So, you know, just because I'm talking about oilers today does not mean it's, you know, the oil market's going to rip out of these pullbacks. It might roll over and die like the gold stocks did, but you know, this is where I exist. I exist where, you know, where the reward to risk sort of shows its face. I think that's the best way of putting it. Okay, I'll leave it there.